RevOpsAF, the only podcast for people who are RevOpsAF and want to learn all about things that are RevOpsAF.
Our goal is to give the revenue operations community, that includes marketing, sales, and CS, for any of you not paying attention, the skills needed to accelerate their careers.
Hello, everybody, and welcome to another episode of RevOpsAF podcast, where we sit down with people who are RevOpsAF to talk all about things that are RevOpsAF. I'm your co-host, Matthew Volm, CEO and founder of RevOps Co-op, a global community of 17,000 plus revenue operators from all over the globe. And today we are sitting down with Vince Chiofolo, who is the SVP of Revenue Operations over at Dash Solutions. Dash Solutions is a leading provider in the payment and engagement space. I'm going to let Vince tell us ultimately more about that. But we are here to talk all about why payments belong in the RevOps conversation. Specifically, we think a lot about, on the customer success side, I know the customer experience, how we can deliver value to customers. And obviously, churn is always a big part of the equation. And one of the things I think that, I don't know if we often forget it, at least it's not typically in the conversation, is payment behavior. And Vince is in the payment space, so we're going to talk a lot about why payment behavior is actually a leading indicator of retention, loyalty, and expansion. But before we get into kind of questions and things like that for you, Vince, I want to first turn it over to you. Tell us a little bit more about yourself, my friend, and then tell us more about Dash Solutions. Well, set the stage before we get into the topic at hand.
Sure. Thanks, Matt. I appreciate you having me on. So yeah, I entered into the workforce at what, looking back, was a weirdly pivotal time, right, for everything in business, but RevOps in particular. So, the early 2000s, for those that remember, there was dedicated operational roles in business, but not necessarily tied to revenue. That wasn't a thing yet. So nobody said, I want to work in RevOps. That term wasn't widely around at that point. The function wasn't even really a thought. But if you were the kind of person who looked at sales or marketing as a system and not just a skill set, you couldn't help but drift towards what would eventually become RevOps. So I'd say I rolled with that tide. I started with sales, kind of banging on phones and learning how to move people through a pipeline personally. And, I liked sales, but I was one of those folks that liked a system, more than in an art form. So, when you were drawn to that at the time, the system management around revenue was a little more marketing than it was sales. So I found myself drifting towards the marketing function at a time, which, again, just convenient timing, everything started to become digital. All right. So digital marketing was the craze. And I definitely leaned into that and things like demand generation and marketing ops. And meanwhile, sales ops started to really evolve into something that was interesting and more strategic than just administrative support. So with all that manifesting, I just kind of rolled the tide to, like a lot of other people did at the time. And later did I learn I wasn't the only one in that boat when revenue operations really hit the scene around 2018. So these days, RevOps and enablement, they definitely sit at the center of what I do. Having both those sales and marketing experiences in my background let me play a little bit of a wider role in leadership. My role is really RevOps, enablement, and then go-to-market growth and leadership that helps me to look at the whole revenue engine and move middle market companies forward.
Yeah, that's awesome. All right, and so you're in the payment space right now. A recent payment study estimates that avoidable payment failures actually contribute to about 50% of all customer churn, which I'll just stop and I'll say that again. Avoidable payment failures contribute to around 50% of all customer churn. So for any subscription-based business who obviously has churn, we always, whenever we see churn, I think our default is to assume that it's something product related, services related, right? You go through kind of this whole work to acquire the customer, you get them on board and all this good stuff, right? And then literally, something related to a credit card expiring, getting declined, whatever it is, that can be the reason why 1 out of every 2 churned customers actually leaves, which is pretty astonishing. And so we often think about this kind of payment failure problem as a finance related problem, not as a RevOps related problem. So maybe talk a little bit more about that study and that particular stat line, and then we'll get into some of the additional questions that I have for you.
Yeah, it's an enlightening stat, right? How much payment experience influences the buyer journey and how much it fails, right? So that 50% of churn in at least subscription-based businesses tied to payments, that's from Payments Magazine or payments.com. And, it's an eye opener when it comes to actually solving the churn problem rather than chalking it up to like a cost of doing business. And it proves that it can be really sneaky and hide in places where we may not expect it to be. So Matt, like you said, when we think about churn, we really tie it to experiences like product or service or pricing or promotion or place, right? The 4 Ps. And what we see definitely every day in our business is there's really a 5th P of payment. And that stat really backs it up, right? If the payment fails, you can have everything else right, but you could create a really bad experience. If you think about how payments exist in business, there's inbound payments, right? Where a company or a person is paying a company. And then there's outbound where a company has to pay an individual. Either of those having a problem can really sabotage the whole customer experience and sacrifice loyalty and then churn. Inbound payments are really going to a website, and we've all experienced this. I actually did just last week, right? Going onto a site and trying to use a payment and the transaction fails. For other people, it may be there's not enough payment optionality to support the way that they like to pay companies. Right. So it becomes a finance problem, right? But it's really a customer experience problem dressed as a finance problem, because for a finance team to lean in and kind of solve for a payment challenge, it may solve for that particular challenge, right? Helping to get transactions to no longer fail, but to open up new options, right? Add buy now, pay later functionality or being able to split payments. You're doing things like opening up TAM to more customers who maybe otherwise wouldn't have considered using your company, but now they do because of the payment, adhesion to what how they like to shop, right? And then outbound is when you receive a payment from a company, if that's a refund or, that's if you're, receiving a disbursement or some sort of a stipend. If that's clunky and it doesn't work well or the check gets lost in the mail, that's a bad position of the company to be in, and it affects their reputation and creates churn more than we see. So when looking at that stat, the 50% of churn influence, right? It's anything along those payment flows going wrong when everything else could go right, that could really do some damage to loyalty and experience.
Yeah, and I know I have a similar example I experienced last week as well we added this insurance policy to our homeowners and our auto because collectively then our overall premium would be less. And so we added this low cost life insurance policy. For some reason, the insurance company didn't use our auto pay to pay them. So I got this notice that it was past due. Tried to pay it through my portal, but it wasn't linked to my accounts. Then I went and I tried to pay it as a guest. And then I went through the whole step. And then I got this payment failure back where it was like, oh, checkout is not working. Please try again later. I was like, I've now tried to pay you like how many times? And
Right.
It's like, what is it? Like, you don't want my money? So guess what? Like, those are now just sitting on my table, and I'm like, I'll get to them when I get to them.
Correct.
So that's a consumer example. But as you were speaking, one of the things that came to mind, and I guess my question for you on this is going to be, why are payments still kind of overlooked given the stat line that you mentioned and some of the things that you just mentioned about how important it is? One of those things that at least popped into my head as you were speaking was, recently over the years, we've been making this shift from, if you go back, I don't know, let's say 5-10 years, kind of peak SaaS, there was typically this thing where you would buy your software product, sign up for a year, X number of seats, and you'd sign a contract. And then, billing, invoicing would be handled separately. Now we're very much in this, kind of PLG self-serve sort of era where I think most companies have this, where the person, like the user, like buying is the same as the user that's using the solution. So you can't, like in today's day and age, you can't necessarily have one without the other, but it doesn't seem like companies have at least. So is that the reason why this is still overlooked, or why are more companies actually paying attention to this? Because again, it seems like if you knew that 50% of your churn was caused by payment failures and avoidable ones, that that would be the obvious first place to look, but it doesn't seem like people are taking it that seriously. So why is that? What am I missing here?
Yeah, I think this all lives under the umbrella of payments being more embedded in the financial culture at organizations than it is in the revenue culture, with sales and marketing and RevOps. And the example is a good one. And I agree. A lot of times now, the party that's making the payment directly is, even in a B2B situation, the user or the administrator of the tool, right? If it's SaaS or if it's a software, not sending it to finance. And it's a really good example because a user of a tool, someone that may be in HR or marketing or sales, may not be as savvy of what to look for and where the landmines are with payments than the financial team is. So, in the world of loyalty, where I've spent a large part of my career, there's something called structural loyalty, and it can go wrong, right? And it's where companies really try to root their customers in, which is a good thing to do, but sometimes it goes sideways. And we've seen it as consumers. And, for example, if you join a gym and you're paying $50 a month, but it costs you $500 to cancel, right? Well, now you just feel trapped. And it's a great example of how companies could sometimes get trapped in SaaS businesses, right? They don't know the right financial terms to look for in the fine print or the contracting, and they can make bad decisions, and that can ultimately be an accessory of a bad payment experience. So, the overall umbrella there is no longer should payments only live in financial business culture. It should exist there. But there's a hand of RevOps and there's a hand of a product that has to be part of the equation as well, to consider things like the customer experience. There's multiple parties that have skin in the game at companies in customer experience and accountability in having that go well. So a payment failure, that can be a reactive financial problem to solve. And then RevOps can make sure that never happens again. And we can get ahead of it and expand our breadth of payment optionality or speed or engagement in the payments that we're offering. And product can work on the user experience to make that better. Why it's overlooked is because it's kind of siloed when it should exist as part of the broader company road mapping exercises, optimization exercises, and the overall RevOps engine at all companies.
Yeah. And so we've kind of laid the foundation for the problem. I think it's clear, hey, this is an issue. Folks should take note. So if you're a revenue operator sitting in a company, subscription-based businesses, maybe having never considered payment failures as a big reason for churn, what are some things that you can do within revenue operations to actually mitigate this problem and change it from one of those reactive, quote unquote, finance problems into an actual revenue opportunity?
Yeah, so we talked about the two holistic types of payments, right? In inbound payments, that's the more obvious one. And this isn't just for e-commerce businesses, it's for any. You really have to look at the user experience, whether it's checkout or making a payment for a subscription for software. Become a really good student of the business and try to diagnose if you're seeing churn somewhere along the way. Is that one of the areas? Payments, I think, as we've alluded to in the conversation so far, is often overlooked as a potential detriment to customer experience. So looking there is a really good first step. And so in inbound payments, it's, we've said it a little bit, but it's looking at the UX design, right? It's are people having a bad experience? Like what I mentioned, a payment failure, the example that you mentioned of, difficulty and clunkiness and trying to make a payment for a company, right? Like everything else, great. Now I just need to pay you. Let me give you money, right? So that's definitely a sabotage to the experience. So, a really great thing to do is start by, looking at and analyzing what the experience is, the customer journey that they go through when they're making payments, and ensure, things are at first working, they're flexible, they work across devices really well, they adhere to the way that you understand your buyer personas and how they like to experience and how they spend their time. The really great example that we used a little bit before was folks want to be able to pay a company. So let's say I had a business where my product was at a $500 price point, right? My TAM is restricted to those that can afford and are willing to pay that $500 price point. But if I offer more payment modalities or options that can allow them to split that payment over time, I might open up a whole nother segment of TAM that would be willing to pay $100 a month, but not $500 all at once. So, when you are analyzing, right, inbound flows, you want to look for not just, hey, where are payments failing? Let's be reactive and jump into it, but like, what are we missing, and how can we turn payments into a revenue optimization, right, and growth engine rather than just reactive and trying to diagnose problems. And in outbound, it's no different, right? We don't think about outbound payments a lot when we think about this paying people, but do it all the time, right? Refunds and credit adjustments or disbursements, even governments paying out disbursements to individuals and citizens for relief and aid, right? A lot of that stuff can go wrong when it doesn't go well. So checks are notorious for not doing well. Even the federal government is starting to move away from them, and that should go to tell people, how costly and clunky they are and inefficient, right? So companies are starting to take notice and say, hey, we have to pay people at times, right? If the federal government is saying that this is too inefficient, we should be looking at that as an improvement area as well, and doing payments faster, more digitally, more mobilely, and in a way that's a little more engaging to the user rather than just kind of moving money from A to B in a way that has risk to the customer experience if it goes south.
Yeah, and back to one of the things I mentioned before about payments, invoicing, billing, things like that historically have been decoupled from people getting deals across the finish line, but they are now, things that are happening simultaneously. And so like you said, you can't have one without the other, meaning the payment experience that you provide to people is going to be a big indicator of the deals that you close, customers you get over the finish line, and then ultimately the people that you keep. And, we're all so used to, especially the way that you can buy and purchase things as a consumer that, B2B, I think, has a lot of room to catch up. And so, yeah, that all makes tons of sense. So you've obviously been in this space for a while. You probably help a lot of different customers over at Dashlane. Do you have any examples of teams or companies, operators that have kind of been in a space where they've turned payment friction into actual revenue recovery? And what have the sort of results been from them?
Yeah, I mean, there's examples within our business, and there's also broader examples out there. Just as a fan and a student of payments in the industry, companies that we all know of have had challenges like this, right? So when we were talking about inbound payments, there's a really popular case study on that on Spotify, how they had some major revenue leakage problems and payment failures, and they created a whole playbook around optimizing things like failed payment retries and expanding localized payment options for more flexibility, and using in-app prompts to help guide users right through payments and the reactivation process. And that was a just RevOps style approach. It wasn't a finance team, right? It was like a coalition that must have been between finance and RevOps as well as product, right? To design that into their flow. And ultimately, it helped recover millions of dollars in lost subscription revenues. And then on the outbound payment front, Uber famously put out their instant pay, a while back, which was the way that they pay drivers. Which before was long wait periods, and it may have been check based for some folks, and when they put out instant pay, drivers were able to cash out instantly onto a debit card product that they could spend anywhere, right? And that's what we're seeing a lot of companies move towards, right? The speed of debit based prepaid payments for those types of transactions. For them, that meant more speed and less friction. It goes beyond and downstream, where there's less support tickets of people calling up asking, where's my payment? Improved driver satisfaction and retention. A lot of these apps compete with each other, and that becomes a revenue lever in that it's a competitive edge to say, do you want to drive with us and get paid faster and more efficiently, or drive with somebody else and have a more clunky payment experience? Churn mitigation, yes, but also drove actual revenue beyond their baseline.
Yeah. Those are great. For any operator sitting out there today who maybe hasn't considered payments as part of their purview and the thing that they're responsible for, or maybe it's been one of those reactive finance sort of problems, what would be one piece of advice that you'd give them on where to start? Like if I'm sitting in if I'm maybe a RevOps team of one or leading a RevOps team, I'm working at a subscription-based business, And, we have churn just like everyone else, but I've never considered anything on the invoicing, billing, payment sort of side. Where do people start? Is it related to first, quantifying the problem, tracking the problem, making sure you're able to collect that as a churn reason? Is it something else? Is it working with the finance team? Like, what's one thing that people could do to get rolling down the right path?
Yeah, I think the first step, right? If companies aren't actively tracking churn in a way that's visible, to their organization, and they could see how it's trending over time, start doing that, right? See that there is even a problem to start diagnosing. And then, once you have that churn number, right, it's a little bit of a cost of doing business, and a lot of companies just chalk churn up to that, but churn compounds, right? Even 5% a month can wipe out almost half your customer base in a year. So, beyond just chalking it up to a cost of operating, right, look beyond the surface and where is that coming from? So that's a little bit quantitative of looking at numbers in the business and measuring, and it's a little qualitative of just like following your customer's journey in, interviewing. I think you only get so much out of NPS scores, but when you like really interview customers in a closed win-loss analysis, you start to really learn a lot more, and you start to hear stories. So these stories that we're talking about today, Matt, of our payment experiences that went wrong, a company can really benefit from hearing that from their customers, because the first step of solving any problem is understanding what the problem is. And once you do, then you could start to mobilize the organization. And I think a great second step is creating a coalition between RevOps, product, and finance on churn. Right, call it a churn committee or whatever you will, but it should be looking at that churn number and your retention numbers, your net revenue retention, and understanding where the problems are, because we could spin our wheels all day trying to create new revenues and spend a lot of money doing new customer acquisition. But growth is also created by reducing your churn and increasing your retention through loyalty. So I think a lot of good conversations could come when you have the right problems in front of the right team of those three parties to talk about how to diagnose it and then eventually get ahead of it and really turn a churn problem into a new revenue lever.
100%. And one more question for you. How is artificial intelligence, AI, impacting the payment space as people look to the next 12 months, 24 months, 36 months? What should we be expecting? What should we be on the lookout for? What does the future look like in payments, and how, if at all, is artificial intelligence impacting the payment space?
Yeah, so it's all the rage, right? It had to come up, and I'm surprised it took that long as well. But yeah, I think in payments, it's similar to a lot of other spaces where there's a lot of exuberance around conceptual AI and what it could do in the future for a little bit more of what I would call like luxury experiences. But for a lot of businesses, when you clear the smoke of the exuberance for the future, you start to see a lot trying to incorporate applied AI in more ancillary ways. And in payments, it's really things like fraud mitigation, right? So being able to identify fraud much better than a person can do, looking at reporting, because that's better for the business and it ends up being better for other companies in their experience. Other ways like that of just being able to incorporate artificial intelligence into existing processes that are happening today that may be a little bit too manually driven, and looking at how to reinforce that with artificial intelligence. And pick the company and they have their thing, right? It's collecting claims or doing adjustments or analyzing data when it comes to payments. And machine learning and AI just helps us to do that better and faster and smarter. And then the future ahead is really exciting in the more conceptual ways of AI, right? Where agents can help to go through the payment process themselves without a consumer having to navigate it, and a lot of other exciting things that lie ahead. So like all other businesses, AI is, I think we're on the precipice. Even though we're starting to see it applied in payments, there's a lot of excitement ahead of how it can make the user experience even better when it comes to payments. And then also at the same time, make the payment experience a lighter lift and more easy to manage for companies.
Yeah. One big thing I think, look at the stories that we shared, and even that stat about 50% of churn being driven by avoidable payment failure, is AI is not a silver bullet or something that's going to go out and solve all your problems, right? I gave the example before of how I tried to pay multiple times. Like, you have this happening all over the place. Provide a better user experience. Don't consider this a reactive finance problem, but a customer experience problem. And just tackle some basics, like the basics of, can our customers pay us for the things that we're providing to them? And can they do that on a regular basis? And how do I shift this from a reactive kind of problem that I need to go out and fix to a proactive one that I can solve before it actually shows itself? And AI might be able to help you with some pieces of that, but guess what? It's not going to magically solve it entirely for you. And yeah, the fraud detection piece, I think, is a really big one, super important on the payment side as well. Well, Vince, thank you very much, my friend, for dropping some knowledge on us about all things payments related and why payments, and specifically payment failures, are not a finance problem, but really a RevOps problem. I appreciate it, my friend. Super helpful. I learned a ton, and I'm sure our audience members will as well. So Vince, thank you for being here. Thank you.
Thank you, Matt. I mean, I really enjoyed the podcast as a listener, so really a pleasure to come in and be able to talk about this today.
Yeah, from listener to guest, we do it all the time. So I appreciate it, my man. Thank you.
Thanks, Matt.
Thanks so much for tuning in to today's episode, everybody.
For more great content like this, join our community at RevOpsCoop.com and check out the links provided in the show notes.
Keep it RevOpsAF, y'all.